Selling in US tech shares weighed on US markets overnight and dragged the indices deeply into the red, despite what was otherwise a fairly calm trading event for global investors. We saw a steadying in bond markets with a couple of points rally in some key 10-year bond markets, but overall a fairly steady interest rate environment. And it was a similar situation with currencies. After a period of extended volatility, we saw a fairly calm night's trading with dollar yen and euro US dollar both steady, and a similar situation with the Australian dollar against the US dollar. So despite those steady leads and good gains for European shares, particularly Italian and German shares, we saw positive momentum at the opening of the US session, but that quickly soured as the sellers moved into the tech stocks. And the reasons for the pressure on the tech stocks is not just that they've been market darlings for so long. There are real concerns about the underlying industries, and in particular, DeepSeek's advances in artificial intelligence are threatening a lot of the investments and the high prices paid in the US for artificial intelligence capabilities. And additionally, the announcement yesterday from a Chinese electric vehicle maker that they'd come up with battery technology that would allow electric vehicles to charge in just 5 minutes really rattled Tesla's share price, and the pressure there has been very substantial. Tesla halving, more than halving in its tumble from the highs that we saw after the US election. So that pressure also extended to Nvidia. Obviously, Nvidia is still at the forefront of artificial intelligence in the US, but you can see the pressure on the share price on this chart, and that makes sense in particular in light of the threats. And it appears that despite the fact we had a fairly buoyant investment environment, those particular concerns about the tech shares are continuing to weigh and look as if they could continue to do so. The market pullback we saw in the US happened despite some fairly strong economic data, and in particular, manufacturing production and industrial production generally were much stronger than expected in the US. Unfortunately, alongside that, we also saw a surge in import prices and import volumes, as it appeared some US businesses were getting ahead of the potential introduction of tariffs. So all eyes now turn to the US Federal Reserve and the interest rate decision that will release overnight. It'll come out at 5 a.m. Australian Eastern Daylight Savings Time, and we'll see. Although there's no expectation there'll be a change to interest rates at this meeting, given the uncertainty in the policy environment in the US, there is a real focus on any commentary and any clues the Fed might give to its views on the growth outlook, given the introduction of tariffs in particular and the big changes in the policy environment overall. So the commentary will be very closely watched, and any hints as to the future direction of interest rates will be taken very seriously, remembering that US interest rate traders are still pricing 2 interest rate cuts by the end of the year. And any commentary from the Fed that goes against that could not only change the outlook for interest rates, but the outlook for shares as well. More locally, it appears that the election campaign that we're still awaiting the official announcement of is very, very imminent, with the Minister for Energy releasing a broadside against the opposition in one of Australia's national news outlets. And the focus by the Minister for Energy on attacking the opposition and his fairly tepid defence of the government's achievements in this particular area over the course of this government suggests that energy will be at the heart of the campaign. And Australian investors are taking note. Yesterday, after its half-year results, we saw a surge in New Hope shares, New Hope coal, and that positive impact on New Hope also spilled into the sector. And as you can see from the chart, a lot of coal stocks, and this is New Hope itself, are coming back from very low levels, much reduced share price levels. So that bounce that we're seeing could well be based on investor views that there is now value in that sector. And if there is potential for coal to be added back into the energy mix, either via change of government policy or a change of government, coal stocks could be in favour. And will certainly be an area of the market we'll be watching closely as the Australian election campaign unfolds.